Welcome to TradeTheMBI.com. This is John. This report is for the 2nd. And, well, it was an interesting start to the day. We had a continuation of selling. And China went right to just above the 23% here on the daily. And bounced back. Of course, the news that started out where the Israelis pointed out that the Iranians had been cheating on the Iran deal. I think that spooked a lot of people, and those kind of unknowns usually create a bit of drama, and that's exactly what we saw. As the day drew on, though, we came to the close and people realized, there's a discount to price, and the world isn't over yet, so opportunity to buy. And of course, there was the pre-expectation for Apple earnings. You can see the NASDAQ did 100% better, not even close. From a correlation standpoint, though the readings are identical, just price behavior is a bit different, which I always like because that price behavior can sometimes lie about what's really happening. What we could see, though, is that pressure continuing for the S&P because of euro decline, and again moving back towards the target that we've talked about for some time. Look at the dip below the red line here on the extremes. That's a significant number of days of distribution completely. Nobody's interested in owning a euro, and, well, for good reason. The correspondence started out okay, but this is way elevated for what it should be. We already talked about the dip below the red line here that we need to get retraced, and then some, at least in my view, but some fear trade moved into there. A little premature, but that happens. Oil, kind of flat, despite this rhetoric. Everyone knows the Israelis have been anxious for a little bit more heated conflict in dealing with Iran, but I don't know that it's in the West's interest for oil prices to spike. We even saw some articles that were saying that in a conflict, oil could be 300. Of course, we heard all that during the Gulf War and that too, and none of that transpired either. So, hyperbole. And of course, everyone's talking about running to gold, and yet gold continues to remain under tremendous pressure. Big distribution there, despite what some would see as really significant prospects for rising inflation, though the GDP numbers coming out of the U.S. were a little soft. So, wow, look at this day. It was pretty intense as the way it started. We ended up with that softness from previous day, and then literally we ended up with just some weak setups early on, and they just literally kept failing, and it was pretty clean to watch. Even this white setup here, that normally you have that orange dip, you had the green above, but was happening within that plus 13.5, and as it was coming down and the rising portion of it, by the time the buy setup came, it was already down here, which was added towards the lows, and then one bar up hit the 38, which was pretty decent from all intents and purposes, and filled in the dip below the red line by coming back to the lows. Only problem was when it made the new lows here, we ended up with another dip below, and that's where I marked it with these magentas. And then we filled those back with just literally no reset whatsoever. What became interesting was later in the day, as we were making ultimate new lows, right over here, we ended up with the spike and the white, but what was interesting about it, let me move this so you can see it clearly. This is that setup I was defining for you, where the orange comes down below the red, you've got red rising, which is a little spike right there, you've got the green rising, and well, that's the initial setup that we usually like to look for. You would need to have, the cyan all the way down here. So your earliest possibility on this one is just here as you're reaching the 23%, but it's this down pivot of the orange that we talk about that is the best secondary buy right there, and it corresponds with not only the dip in the orange, but also below the negative 6.25, which also corresponded with the 50% Fibonacci right there on this close of the white line. And you can see price took off from there. So from that close was 33, and we went to 55. So that's quite effective in waiting for that setup. Of course, you also got to positive shakeout, and from negative, I mean, we were negative the entire day, never even got close. There was a little brief spot back over here, but cascaded down from there ever since. And all we did, despite this whole thing, was just return right back to the close from the previous day. So how simple was that? But still interesting to show from an effective standpoint. And it was interesting because this is another one that we don't really talk about much because it's going to be easier to depict them in the colors when I show them. But once that cyan moves below red, you get an inverse effect between the orange and the steel. They operate pretty much as opposites. So effectively, the steel dipping below here becomes effectively a short setup because you're not always going to have the orange pop up when it does that. It usually does most of the time. But in this particular case, as long as you have declining red, even if green is slightly above, it still tends to be pretty good. And at that point, that was the first beginning move of the Azure, and that produced a fairly decent little short pop. But once it moves back above the negative 13.5, it's sort of over, which is interesting because it's over right at the point you would think of a DOC spread right here. And what you ended up getting is falling orange, rising steel, rising green, and the red turning pretty much immediately. So the effective signal of it being short back here at 48, and then it dipped as low as the ABM green at that particular point. It got all the way down to 40. I mean, it was a pretty decent move, but you can see that it supported right on there, dipped slightly below, came back above. And what do we talk about when it comes to the ABMs? It's always that cross below and the move back above. You got to be prepared to respect it. And sure enough, that was the precursor. And once it got above the gold ABM, which did right about here, and then boom, it just exploded from there. Created a brief little setup here, but you can see that we had ended up with the dip all the way below the negative, well, in this case, negative 7.5. It was actually lower than that for the cyan, which that added to the bullish power of it. So, all exciting stuff. At the end of the day, what you're really going to see is just all green going all the way back to right about here, and then pretty much this will all be red from the previous points. Now there were a couple of other little teeny buys that came in that met the setups, but the best they produced was just really zone to zone trade. I mean, from 0 to 23 and from 23 back to 0, marginal stuff. It is interesting. We have a lot of positive extremes throughout this, so wouldn't be surprised that we could revisit this topic again. So that's okay. We take it one day at a time, and for now, we're still getting the range in the market, but the signals have been fairly healthy, and you got to keep respecting the fact that this, even with the turnaround in price, you still have a falling shakeout. What we were seeing is the rising orange here. If that dips down at this particular key point, because now we've met steel orange right with the cyan right in the middle, and so whichever way this one breaks open from a snake standpoint, is what we were calling, is going to give us the precursor to the direction that we're going to get a decent run for. So I think that is helpful to know. So we're very near to that, and interesting that it's going to correspond right as new fund money comes in on the next couple of days. So we'll be looking for that and keeping a strong eye out for it. As always, though, trade well. We'll talk to you later.